Well, happy Monday. It's March 18th. Want to bring you the latest data here in the Austin metro area. We definitely have some trends changing. I'm going to share interest rates, where those trends are heading. We're going to look at median home prices. They are starting to go up. I'm even going to share some rental trends, so stick around for that. But first, obviously, I want to talk about the elephant in the room. Unless you've been under a rock, you probably heard about this big settlement from the National Association of Realtors last Friday that have to do with how commissions are advertised in the MLS. But that's not actually what most of the media articles are kind of trying to highlight. I would argue that most of them are highly misleading, and this is probably my favorite one. The biggest shakeup ever in real estate just happened. The National Association of Realtors will eliminate a 6% commission standard after settling a case. Well, there is no standard. The NAR has never, ever said they don't care what we charge. It's not up to them. They don't have any rules around what commission should be, how much they should be charged. The NAR has rules around how commissions are to be advertised or not advertised, maybe moving forward, in the MLS system. So it has to do with advertising, has nothing to do with an amount. So you can't eliminate a standard that never existed. Keller Williams, Remax, name a broker. No broker in America is allowed to tell me what I am allowed to charge my clients. I'm an independent contractor. So anyways, there's a lot of fact and fiction that needs to be separated, but I'm going to have a video later today. It's going to be called The Truth About Commissions 2024 Updates. Take a few minutes. I want to spell out to you how the advertising rules around commissions are today, what rules are going to be put in place later this year, and how it can impact the conversations between buyers, sellers, and agents moving forward. But it's all about advertising. The amount of commission has always been negotiable. It always will be negotiable. There always will be listing agents. There always will be buyer agents. Take a breath. But anyways, I wanted to call that out. I'm sure you're seeing many, many articles, but I want to share some more articles that I think are more interesting for this week. So this is Austin City News. And there's several articles in here that I think are interesting. Yelp just ranked Austin a top city for women-owned businesses. I love to see that. This one's pretty interesting too if you like population growth. So new census data underscores that, hey, Austin is still booming. We are still one of the top 4 fastest growing metros. All of them are in Florida, with Austin being right in there, other than Florida. Our metro area saw the population balloon by more than 7.5% since the pandemic began. So let's say early 2020 until now, 2024, call it 4 years of population growth. That's 7.5%, almost 2% a year. Austin has seen its population growth. And as part of that, here comes the pain. Austinites need nearly 80% more income since 2020 to afford a home. Shocker, right? Not only have the prices of homes gone up, but of course they also came down the last couple of years. But even with that price inflation of homes, we also, if you've been living here more than 2 years, you felt it in your property taxes. Property taxes have gone way up to kind of keep in line with those higher home values. And insurance has also come up. And on top of that, we've all talked about mortgage rates. Boy, it's like a quadruple whammy on the mortgage payment. So if you want to know why buyers are stressed and how difficult it is to buy a house right now, here is why. It's because that mortgage payment is up nearly 80% since 2020. And that's painful. All right, so I want to come over here. Let's talk about interest rates. I know everybody has wanted these to come down. They're not coming down right now. So right now we're still a bit over 7%. You can see what all the other products are trending right now, at least mid 6s and up, even if you're getting one of the government-backed loans like FHA, VA. But here's a chart that kind of explains it. I love this headline too. On the road to rate cuts, markets are asking, hey, are we there yet? No. The answer is no. We're not there yet. And so actually, this may surprise you, but just look at this chart. I don't even have to explain it to you, but visually, you can see that rates, this starts January 1st through now, rates have actually gone up this year. So I think that surprises people. I know we've been talking about rates are going to go down and rates will eventually go down. I do think that's true eventually. We just don't know when. But for now, we started the year around about 6.75. We're now over 7%. So even though it's been volatile, we've had a couple drops here and drop there in March. Rates are volatile. We're seeing rates continue to stay higher. And I think buyers are getting used to the idea that they're going to be at or around 7% for the foreseeable future. And so we're going to see how that plays out in the spring market. But let me show you in the data how that's playing out so far. So this is a February snapshot. I'm going to move myself as much as I can over to the left-hand side here. So this is looking at different, the total metro area. We have a 5-county metro area. So I'm going to start with the total right here, and then we're going to drop it down, and we're going to look at each individual county. So median sales price for the total metro is going up a little bit. Closed sales are up a little bit. What I think is interesting is new listings up 44.9%. That is a lot of new listings right there. Now, they're saying on these charts that pendings are down. I can tell you, looking at other data, I actually think pendings are probably up that amount, not down. So I'm not sure if this is a typo, but every other data I've seen, pendings are up as well. They're just not as up as much as the new listings. And then the last box I want us to look at is in this bottom right. It says average close to list price, and it compares this year to last year. So when they're talking about close to list price, I'll give you an example of what that means. Let's say you list a house at $500,000, you drop it to $480,000, you drop it to $460,000, and then you sell it at $455,000. So really, list price was $5,000 at the beginning, and you sold it at $455,000 at the end. That's the 92.2%, that gap, not the $460,000 to $455,000, that final list price. So anyways, I like that. It's giving us a better idea of the total drop. So anyways, they were selling really, it was really slow last year. So you can see a big drop, almost 8% off that original list price. Homes were eventually closing. This year, it's tightening up. We're back up below 5% gap difference. So homes are starting to sell faster, and they're starting to sell closer to list price. This is the total metro area and about 3 months of inventory. If I go to Bastrop and Caldwell, which are on the east side, we're seeing the median sales price come down a little bit. And again, these are the more affordable areas, and I think it's impacting those buyers that are having more trouble buying homes. But we're seeing new listings up 32%. But look at that gap. It's closing almost 5% more on the home value. So in other words, as the prices come down, the buyers are able to get closer to that price. So it's tightening up that gap. Caldwell County, median sales price is down. But again, the close to list price, this is the only county I've seen where you've actually seen more of a gap. So Caldwell's struggling a little more. I have a theory around that. It's a very small county. This is where Lockhart is, for example. But I think what's happening is as the prices come down in the metro, Lockhart's farther away. Well, if that buyer that had to move to Lockhart 2 years ago can now come back into the city for the same price, they're going to do so. So it's making it harder to get people to drive out to Lockhart to buy a home. Hayes County, this is to the south. Median home price is up a little bit. New listings up 56%. And again, I think pending, I think pendings are inaccurate. I do think pendings are going up. But again, here's our average close to list price. We're seeing it tighten up. And months of inventory is starting to tighten up as well. Travis County, so this is not just Austin, but it's also Lago Vista, Lakeway, Pflugerville, several markets, Manor. So the median home price is about the same, right at $500,000. New listings up 42.8%. That's huge. And of course, close to list price tightening up. Williamson County, these are all the big suburbs to the north. Median sales price, we're seeing that go up. Months of inventory coming down pretty hard. They're lower and probably tighter than most parts of the metro. They're now down to 2.4 months of inventory. New listings are up 41%. And again, for months of inventory to go down, it makes no sense that pendings are going down. So I'm telling you, I think pendings are going up, especially if new listings are going up. And average close to list price, again, is tightening up. So let's come over here. So I talked about mortgage rates. Here's historic sales price trend. All right, so this is it's hard to see in too much data. Let's see if I can zap that up for you. Make it a little bigger. But this has to do with where a price is going. How's the market trending on price? This is last year until I get to this spot right here. This is January and where it changed. You can see we're starting to see that median home price go up. We started the year around $425 for the metro. We're now up around $450 for the metro. So just again, spring market, we're starting to see that bounce go up. It's still early data because we're only looking at January and February, but my prediction is through June, unless we have a big interest rate spike, through June, I expect we're going to see the median home price in the market continue to go up. I also expect we're going to see, as all these active listings come out, buyers are going to come out too. We're feeling it. So we're going to see pendings go up. We're going to see active listings go up. More sales typically means more demand, more activity in the market. Finally, I want to talk about rents. So a lot of you are landlords as well, at least if you're my clients. I'm a landlord too. So what's happening in the rental market? So this is looking at February of this year compared to February of last year. So leases are up a little bit. There's actually a little more leasing activity. And if you look at duplexes, this is single family is the top box, duplexes is the bottom box. So we're seeing a little more leasing activity in single families compared to last year, and a huge amount of leasing activity in duplexes. However, new listings in single families is up 17%. That means you're now competing as a landlord with more homes on the market to find a tenant. The average and median sold price, it's a little up, a little down. It's about 2% up on the average. It's about 2% down on the median. So kind of depends on where you're located, but it's flat at best is the way I would describe that. If I look at duplexes, it's actually softening because new listings are up almost 30%. So there are a lot more duplex units for for lease. And we're seeing a softening in rent. So even though more people are renting them, they're renting them at a slightly lower price. The biggest reason, and I've talked about this in many of my videos, is that Austin is one of the top countries or top cities in the country right now, bringing new apartment inventory to the market. So last year, the data that I saw is we brought about 23,000 new units to the market. That means they're empty, and you got to fill up 23,000 new rental units. This year is going to be an even higher number. And again, they're empty. So imagine you added 50,000 empty apartments to a city. That's like a suburb with nobody living in it. So you got to fill that whole thing up. The good news is we have a ton of population growth, as I explained. And so over the next 2 years or so, it will start to fill all that up. But for now, we're probably a little oversupplied on the rental inventory, and we're seeing that here in the data. So just know that this is still a great time to be a landlord. You want to be leasing your properties, usually in the spring or in the summer. And I recommend that. That's when we tend to have more leasing activity. So if you're a buyer right now, if you're a seller right now, this is the spring. We're seeing that activity. I'm feeling it. We're getting more activity, more people at open houses. If you're a buyer, again, just be aware, talk with your lender, make sure that you know what you can afford with that mortgage rate, and we're going to help you work on that. If you are a seller, just know there's more activity out there. There's more listings. And so your hope is that that buyer demand will keep up with this growth in inventory. If it doesn't, we're going to have a lot of homes for sale and not enough buyers to buy them. And that typically is going to soften that price at some point. So hopefully the spring market's going to keep up. We're seeing some good activity up there. We're going to bring this data to you each and every week. Make sure to check out our YouTube channel at Ryan Kelly Group. You can follow these weekly videos. Make sure to hit that subscribe button. And of course, if you're looking or know anybody looking to buy, sell, or invest in Austin, we'd love the opportunity to visit with them. Until then, hey, spring break is over. We are now on our way towards Easter in a couple weeks. Hope you guys have a great week, and we'll talk to you next Monday. Thanks.